And welcome to Chart of the Day Cafe for Tuesday, February 16th, 2016. Just going to read our disclaimer quickly. Trading stocks has a high level of risk and viewers should complete their own due diligence on any stock or underlying that they intend to own. 100% of the content of this video and communique is intended for journalistic and educational purposes only. This video and all indicators, strategies, and articles herein should not be construed as investment advice. Thank you for your patience with that. So as regular viewers well know, we've been stepping back to take a look at the Russell Index on the 5-year monthly time frame. With all of this severe price action, I think the monthly charts are really invaluable to take a look at and just to get a point of reference as to where we are right here, right now. So first thing you want to notice is the uptrend that the Russell was in through all of 2013. The consolidation that took place in 2014, the way it consolidated and stayed within this blue channel that we've got drawn in. The move up and out into early 2015, and then the ensuing sell-off that's brought us right back to where we are right here, right now. So well below the bottom blue channel line, well below the 8-day EMA on the monthly chart. So you want to be really super cautious here, but I'm starting to see some signs of encouragement. You want to see follow through for sure, but it's nice to see the futures up and in a healthy way this morning. Shanghai led the Asian markets. They've reopened after their New Year's, and the Shanghai market led Asia, had a pretty strong start to the week. Oil looks to be finding a little bit of footing. We've got to see some follow through, and we're not making any predictions on oil, but things might be coming together to give the markets a little bit of a lift here. So let's step away from the Russell and take a quick look at the Dow. Again, 5-year monthly chart. I've got this area of support drawn in where price, it was defended pretty heavily in the past. So we had this long wick in the latter part of 2014, and the volume came in to push it up and over this area. It was defended again with a long wick here in the latter part of 2015. And we had a long wick last month, and maybe we're getting a little bit of a wick here this month. This is the monthly candle so far. It's only halfway through February, but I like the way price was defended here. And, you know, if Asia starts to kick in, if oil starts to reflect a better environment that way, perhaps we'll get up and over this area here. The S&P looks much the same as the Dow. So same candle that defended this area here, 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 and this is where we are right here, right now. And then the final chart I wanted to show you is transports. Trading in this great big wedge area of support on a 5-year monthly chart. This is the candle so far for the month. Could this be shaping up to be a little bit of a reversal and lift up and away? Who knows? We want to see follow through, but I'm seeing some encouraging signs anyway. The last chart I want to show you is FXI, which we've looked at before. It's the large cap Chinese stocks, Asian stocks. It traded in this channel all through this time frame, all these years, traded within the blue channel line. And then much like the Russell, it ticked up and out in 2015, early 2015, had a parabolic move up and then a parabolic move down. But we are right here on this lower blue channel line. Very heavy area of support in the past. Will it be support now? Who knows? Certainly doesn't look that way so far. We want to see a lot more follow through. But if you put all these things together, maybe there is some signs that we might start to get a little lift this way. Who knows? Early yet, but I'm looking at all those things and keeping an eye on them all the time. So with that, I wanted to share, you want to be really careful here. I want to be really super cautious in my wording, and I'm not recommending anything whatsoever, but I wanted to show you a couple of past Chart of the Day Cafe picks that might be interesting to keep an eye on. The first one is Apple. Trading in this big wedge, 5-year monthly chart. It's at support. It's in this wedge. It was defended. Look at this long wick. That was that huge sell-off in August. Like the way it is behaving right here, right now. So that's the monthly chart. Let's take a look at it on the daily. It's bouncing around this area. This morning, Apple, I'm going to show you quickly. When you check CNBC early movers this morning, Apple is launching its Apple Pay service in China as of today. Wow, that could be a catalyst. So that's something to keep an eye on. Getting back to the chart again, wedge. So it's all about price moving up and over that 8-day EMA, the blue line, and staying above it. So for me, it's about being patient, waiting for it to lift and move up and over. You can either use the daily or the weekly, whatever your trading plan would suggest, but for me, it's the 8-day EMA on the daily, price lifting up and over. I checked the scores on Apple this morning just to remind you. It's got an RV score of 1.53. That's very high in value. It's got a forecasted earnings growth rate of 18%, and it pays a 2.21% dividend yield. Nice. The other one that I wanted to show you quickly is Disney, another chart of the day cafe pick, so loaded with value and growth. Great big wedge at support, hammer last week. This is the weekly chart. Let's take a look at the daily chart. Again, like Apple, trading in this wedge. If it trades up and over that blue line and out of this wedge, that would suggest, at least to me, a pretty strong technical move. So you want to look for Disney up and out of this area here. Not making any recommendations whatsoever, just showing you an interesting chart and a past chart of the day cafe pick. Check the scores on Disney this morning. RV score of 1.42, very high. 15% forecasted growth rate and a dividend yield of 1.56%. The last one I want to show you is GM. So the transports have been really not performing very well, but GM, this is the weekly chart. We're looking at the 5-year weekly in an area where it found support in the past. So early for GM, but it might be one to keep an eye on. Tesla announced their earnings last week, as we were talking about in our Thursday video last Thursday. GM's at this area of support, resistance. If it gets up and over that area and price moves up and over the blue line or past earnings, GM could be an interesting one to keep an eye on. And again, I checked the scores on this one. It's a past chart of the day cafe pick. So it's got value and growth. The scores on it this morning, 1.43 for value, very high. 19% forecasted earnings growth rate, that's nice. And it pays, are you ready for this? Oh my gosh, 5.49% dividend yield. So if the markets firm up this week and the indexes start to lift, up and over that blue line for GM might be an interesting place to start looking. Always for your further research, but just wanted to share those charts with you. Hope you had a nice long weekend, and we will put a video out again on Thursday. Thanks, and have a good rest of the week.